right, traders, this is Blake Morrow, and you are listening to the Daily Roundup webinar. Wow, what a lot of big moves here, and a lot of things that aren't making a ton of sense to me. But first and foremost, I think what we have to talk about is we have to talk about the move in yields. Yields are dropping. Some of the guys in my office have been talking to some of their friends, and some of the yields outward into 2021 are showing negative yields. So because of that, people are selling dollars like in mass today. So the dollar has been under pressure as a result. So there's been a lot of moves that are, you can see the yields. I mean, this is a 10-year yield right now. This is a CFD, but it still tracks yields pretty closely. If you want to see what the rest of the curve looks like here's the 5-year, here's the 10-year, here's the 30-year. So bonds are creaming higher, yields are dropping, and it's keeping a lot of downside pressure on the dollar across the board. So because of this, we have, the Euro's at highs. We have the Aussie that just hit. The Aussie is actually a pretty key resistance here. We're at 65 cents. If you use ForexAnalytix, you knew that we were pushing up against some resistance here at 64.77, and if it broke out, we would test 65 cents. Well, here we are. Okay, we're up here right now, and I don't know if it's going to really stop. I mean, you look at the dollar, and the dollar's just getting creamed across the board. One of the big ones that this one got me today is you see the sell-off in the dollar Canadian. The dollar Canadian, despite the crude has started to come off the highs, the dollar Canadian has not bounced at all. Matter of fact, the dollar Canadian's down from when we spiked up here at 140.80, we've dropped 130 pips in 2.5 hours. And I know a lot of us are sitting there going, for why? For what? It's like, most of it has to do with this move in bonds and yields. And that's the one thing that we have to, that we're finding out that this move is attributing to, but it's happening. Like I said, it's across the board. I mean, look at the euro, even the cable, which was weak, has bounced. The Aussie is at highs, the Kiwis at highs, dollar Canadian's obviously at lows, the dollar Mexican peso is trading weak. And then we have risk on top of that. Then you have the S&P that's pushing up against resistance. This is, I've been looking at this as possibly a head and shoulder pattern, possibly. And, as I said earlier today, we had to kind of maintain lower highs, and we were doing that earlier, but then we popped into new highs. Now we could end up putting in a false breakout. That would be probably make the bears feel a little bit better. But overall, let me grab a fib here just so you can see it. Overall, it's risk on, yields are dropping, bonds are rallying, yields are dropping, and it's just a risk on move. So yeah, these moves today are pretty outsized. I mean, you look at the dollar Canadian, that's a 200 pip move lower. I mean, you can hear some of the guys from my office. I don't know if you can hear them. It's just like, just everybody's like kind of dumbfounded. But let's note with the dollar Canadian, for example, false breakout, okay, which, here, if you use ForexAnalytix, this is the warning from earlier. Dollar Canadian's back to 618 retracement of the 140.72 level after possibly making a false breakout at the high above the 141.50 level yesterday. Bulls have to hold these levels to make upside break of the longer term wedge valid. And that's where I tried to play it on the long side, is down here. And then, I got stopped out. But now we're at like a confluence of support, the 127% extension, 161%, or excuse me, a 618. I'm not saying that you should go long here, but we probably will stabilize, especially ahead of the non-farm payroll and Canadian jobs report. I think anybody who's buying the Canadian dollar right now is probably thinking, oh, wait, do I really want to get super long ahead of the Canadian jobs report tomorrow and the US jobs report? Because as you guys know, we have both Canada and US tomorrow. So that's obviously a big risk, so you might get some people paring back some of these trades. Um, another big trade that I didn't see coming was this sell-off in the Euro Aussie. Even though stocks going higher, you'd expect it to move lower. We were stopping here at the 127% extension, and then we slumped again, and now we're at the 88% retracement of this entire move. And I would assume that we probably find some support here just because we are divergent. If you guys are wanting to take a punt on the Euro Aussie on the long side, you probably put your stops below 166, and then just look for a move back above 67, near term. I would think that's like an idea of something that you might be able to think about doing, but again, it's counter trend, and you're going to have to see equities really start to reverse here. All these yen pairs minus, even the dollar yen is holding up pretty well despite the bond move, but you can see all the other yen pairs like the Aussie yen, and we did a false breakdown. I talked about this morning on the face webinar. When I got stopped out, I was like, what the hell? And we just rallied into new highs, stopping every short out along the way up here, hitting the 618 retracement and also resistance. Hold on real quick. This is another one. If you're like, well, I don't want to play the Euro Aussie, well, fine. This filled the gap again, or we filled the gap over here, but we just rallied right into resistance at 69.20. It's also 618. So if you want to sell it up here, that's an idea. Just, there are opportunities, but everything that you do right now is going to be counter trend. You have to be really careful, knowing that we have jobs report tomorrow, knowing that it's been a pretty massive move across the board. Oh, one last thing I want to bring up, the VIX. So look at where the VIX is at. The VIX is at recent lows. These are lows from the 29th, the end of the month. So at recent lows, this puts you probably see some people on social media saying the risk parity trade is back on. That's basically volatility is down. We're buying everything, knowing that volatility is down. We're going to buy everything that, take on some risk trades. And that's, what's happening here with the volatility so weak. That's not saying that volatility can't bounce from these levels. I'm just saying that that's probably one of the reasons why it's keeping the stock market relatively elevated. Anyway, like I said, you guys got to be a little careful. I got caught off guard today. I did not think that these moves were going to be as strong as they are. And I did not think we were going to continue, especially with the dollar at the length and duration that we've traveled. But it's been pretty massive. I think that we're probably going to, at this point in time, stabilize a little bit. Try not to get too carried away going into Asian trade. I doubt anyone's going to be too directional. So if you pick up something and you're counter trend, I'll just give you an example. Like, let's say which one's the big mover today is the dollar Canadian. So let's say you bought the dollar Canadian here, and it bounces to like 39.80 or like 39.90. Don't expect it to get all the way back to 141. It's not going back there today. It's just not after this big of a move. It might bounce a little bit and then consolidate and wait for tomorrow's data, so whatever you're doing, just don't expect fireworks unless, there's some headline that hits the wires that we weren't aware of. Anyway, yeah, guys, gals, I hope you enjoyed today's daily roundup. Remember, if you are listening to this as a recording, that means you're probably not a ForexAnalytix subscriber, so make sure you try it out. It's only $1 for 10 days. And yeah, Tiana said CAD yen is insane. It is insane. These moves have been massive. Anyway, you guys take care out there. Remember, it is Thursday, so I will not be broadcasting the daily roundup tomorrow, but we'll see you on the Face webinar tomorrow morning. All right, guys, have a good one. Thanks, Brock. We'll see you guys soon.